everybody, Smart Silver Stacker here. Hope you're doing well. Welcome to another Silver Stacker live stream. So we've got a bit of a pullback over the past couple of sessions in both the price of gold and the price of silver. We're going to talk about that today, some of the developments that are driving that price action in the metals. And we'll also talk about, do you want to buy into this dip or not? Does it have further to go? How low could the metals go? Is now a good time to stack? I'll be giving you my take on that and letting you know what I am doing as well. And if you are tuning in today, thank you so much for joining us. Please do smash that like button. Don't smack it. Click that subscribe button, all that good stuff. And I do appreciate you tuning in. So let's take a look at the price of gold. We have got gold now under 2,000 bucks, and that level had been holding out pretty stoutly as support, and it looks like that has given out now, although it looks like we are recovering from the lows of earlier in the session. But the fact that gold has dropped down below 2,000 bucks, this is something I've been calling for over the past couple of weeks, is a sell-off in the price of gold and silver, and kind of hard to say if it could go lower from here. I think there's a possibility it might. Silver, kind of the same story. Today, basically flat on the day, up about 10 cents at the time I'm live streaming this and speaking with all of you, but still pretty well off of the highs that it had earlier of over 26 bucks. Some of you folks are saying, I hope it drops more. Premiums are still high on silver. Yeah, let's talk about that. Let's get into that. And then we'll talk about why the price is falling. So, first of all, you're right. The premiums do remain high. However, there are deals out there. Now, I actually went ahead and pulled the trigger and did some stacking today. Although I do feel that there's, more room to fall from here. It's very difficult to predict these things in the short term. I went ahead and pulled the trigger on one of these kilo bars of silver, these Valcambi silver bars from SD Bullion. If you haven't seen, they've got a flash sale going on over there right now. You can get these for as low as $179 over spot, although you do have to get 15 or more of them to get that pricing. But still, at today's silver price, I think $8.35 is a pretty good deal for a kilo bar. So I did get some of those. Also threw a few other things in the cart there, a couple of 1 ounce rounds that I just thought were cool. So I'll be having an unboxing for you whenever those arrive, probably sometime next week. So look out for that. I'll probably do it on a live stream. I think that's a good place to do an unboxing when you're stacking some silver. And I'll show you some of those cool silver rounds that I picked up as well. But, the price could fall further from here. But when you're dollar cost averaging, when you're just kind of adding to your stack, you don't have to pick the bottoms, That's an important thing, because if you're always sitting around waiting to try to pick the bottom in silver, very likely you may get left out when it starts heading higher. And so I like to just dollar cost average and accumulate on days like today when we've seen a bit of a pullback. Yeah, it could go further, but, I'm not going all in. I'm just keeping some powder dry in case that happens. But I do think that, these pullbacks are good opportunities to buy into. And that's just kind of my take on it. Because ultimately, nothing has changed here. This is largely a technical pullback. So we're going to talk about that as well. Let's see what the folks in the chat are saying. Go with 1 ounce of gold or 50 ounces of silver. Well, gold to silver ratio still around 83 last time I checked. Let's see what it is right now. I think SD Bullion has a chart for that. Yeah, 83.24. So you got the gold to silver ratio here. At this level, I am primarily stacking silver. Now, I can't tell you what to do. Gold, still a great metal to be stacking, great inflation hedge, great traditional money, and it is a very nice compact store of wealth. But to me, if you're looking to, get the more undervalued asset of the two, I still think silver at an 83 gold to silver ratio is a steal. I did a video yesterday where I talked kind of extensively about the gold to silver ratio. If you saw that, if you haven't seen it yet, check it out after this live stream's over. I give you a price forecast of $200 silver, and I kind of go through some of the historical data and some charts and give you an idea of why I think that is actually not an unreasonable forecast in the medium to long term. Now, in the short term, I don't think we're going to see that, and we could even see lower prices if this pullback continues. But I can tell you, if we do get down to the same levels that we were at maybe in September, October, which I think is about as low as we can expect this pullback to go. I mean, hard to say how far the bottom down could be, but you know, I would say 18, 19 bucks for silver is probably the lowest we're going to see. And if it does get that low, I will be accumulating a lot. Now, premiums, however, premiums are high. Someone was pointing that out in the chat earlier. And, one thing that you can see when premiums more or less rise to compensate for the decline in the spot price of silver, what that is telling you is that the selling that is occurring is not happening in the physical market. And I don't think that's a shock to any stackers out there. But when you see the spot price dropping, that means that paper markets are selling, future contracts are being sold, maybe some ETFs are getting sold. There's a lot of paper selling, but that physical metal isn't getting sold into the market. And so you're not seeing a decline in the price of physical, because you got to remember the spot price represents paper markets. Retail bullion like this, like, kilo bars of silver, which I'm a big fan of. That's what I just picked up from SD Bullion. They got them on sale right now. Or, 1 ounce rounds or 20 ounce bars, whatever kind of physical metal you have, that's a whole other market. It's the physical market. That's why premiums exist in the first place. So it's indicative that now is still a good time to stack, especially if you can get a low premium deal like SD Bullion has on those kilo bars right now, or any other place. Go to your local coin shop. Maybe they sometimes have low premium deals, even when the physical market is trending towards lower premiums. You got to look for those low premiums. Scott says hi Scott, thanks for tuning in. Always appreciate you commenting and watching on the videos. I know we got a bunch of the regulars in the chat, it looks like. I do really appreciate all of you. Are you smart as a silver stacker says they raised the debt ceiling? Well, that's not a surprise. I haven't actually seen that story yet. I was going to talk about the debt ceiling. I'll have to check out that story after the live stream is over, because I don't want to pause and have you guys having dead air while I read a story. But that's very interesting. And put it in the chat if you can confirm that the debt ceiling has been raised, because it's not surprising. They're going to raise the debt ceiling. I've been saying this all along, that they always want to spend. And I don't know if that's true or not. I'm not saying you're spreading disinfo. Are you as smart as a silver stacker? I just haven't seen that headline yet. However, the debt ceiling does seem to be one of the things that is driving what is going on right now, the rally that we see in the stock market. And as far as I know, they haven't raised the debt ceiling yet, but it does look like they're coming together to arrive at a deal. In fact, this is a story on Kitco News regarding the pullback. This is by Jim Wyckoff. Resurgent greenback constraining metals market bulls. Now, we'll get into this story here in just a moment. I do want to take a look at the chart of the US dollar index, though, and you can see that that's been on the rise, which, again, I was forecasting this. I'm not trying to toot my own horn. I got plenty of things wrong as well, in my forecast, but it's nice when you get one right. And I did say in the live streams over last week that we would see the US dollar index rise and the metals fall, which appears to be playing out. And the reason I was calling for that is because the excuse me, the the US dollar index had just gotten very oversold, and it declined from, in September, October, it was up around 114 down to around the 100 level. And for a currency like the US dollar, that's one of the biggest forex markets, perhaps the biggest forex market in the world. I'm not an expert on forex trading, but I know that the US dollar is an extremely large and liquid market. For it to decline that rapidly, I mean, if you look at this decline, we look at the 1-year chart, look at that decline there. I mean, it's a massive decline over the past 6 months. And so, it was kind of set up just for a counter trend rally. Technically very oversold, and the metals had a huge rise over the same period of time. With it was a little bit of a bumpy road, but they'd been on a huge rally, and so technically they were getting a little overbought and they needed to correct. And I still think there may be a little bit to this correction. Today, again, back to the story on Kitco, the president cutting short a trip that he had been engaging in. I don't know. I don't watch the mainstream news. I don't follow what these politicians do all the time, but I guess he was overseas And he's cutting it short to come speak with Kevin McCarthy, the House Speaker, and they're going to try to work out a deal. And ultimately, they're going to raise the debt ceiling. When we do see that, we might see a bit more of a sell-off in metals. That could be a catalyst because that will remove some of the uncertainty from the equation if the debt ceiling gets hiked. And I do have a very strong belief that the debt ceiling is going to get raised because, again, both parties are very committed to spending a lot of money and they need to borrow to do that. This was interesting. This is from Reuters. Yellen warns U.S. default could trigger recession and break financial markets. And yeah, I mean, Yellen is probably right about this. So she was speaking with, high ups in banking and finance, and she gave this ominous warning saying that this could result a default in massive decline in markets. Also, look at this. She said that it could lead to disruptions in the federal government's operations, including air traffic control, law enforcement, border security, and national defense and telecommunications systems. And she's probably not wrong there. I mean, we have a very fragile system. If confidence is lost in the U.S. ability to pay its debts, then we very well could see major disruptions to all of those services. And this is one reason that, you need to do some other things to prepare other than just stacking silver. You need to have your emergency food. You need to have your security plan. You need to have maybe some way to bug out, an alternative location to go to, depending on where you live. I mean, if you're already out in a rural area of low population density, maybe that's not a big problem. But if you're in the cities and law enforcement breaks down and the grid goes down and telecoms goes down, we've already seen over the past several years the kind of civil disorder that can break out when, small things occur. And if we get a disruption to, say, SNAP benefits going out, there's going to be a lot of hungry people who are going to be very pissed off. And, they might take to the streets, and we could see a breakdown, especially in the absence of law and order, or of law enforcement. We could see a breakdown of law and order. So, gold and silver don't do you a lot of good in that kind of a situation. But, you gotta have all your preparations squared away. Now, the thing that I will disagree with Yellen here, with our illustrious Janet Yellen, former chair of the Federal Reserve, current, what is she, Secretary of the Treasury. Now, I will disagree with her that raising the debt ceiling eliminates this problem because one way or the other, the U.S. is going to default. I just want to point that out. The U.S. is absolutely headed towards a default. And the reason is we're spending like $2.2 trillion of deficit spending annually now. We've got $31.7 trillion in debt. We've got 180 some odd trillion dollars in unfunded liabilities. And guess what? There's no way that that kind of obligation can ever be paid. It just can't happen. It will never happen. It is an unpayable level of debt. There is absolutely no way out of this hole. I mean, the only option would be massive austerity. Forget about Social Security. It's gone. I mean, maybe some kind of means tested thing where the worst off people collecting Social Security can still get some. But if you have an income, you have some wealth, you won't be able to get that. Medicare gone, military gutted, can't be getting in World War III. All of this spending needs to be massively cut back in order to tackle this debt, or we're going to default. Now, there's absolutely no political will for any of that, right? That will never happen. Not on these politicians' watches, not with the current entitled electorate. There's no way that's ever going to happen. So, what we're going to get instead of, a default where they just say, hey, we can't pay, we have to pay, cents on the dollar or something, it's just going to be a default by inflation. I mean, that is the road that we are headed down, is a default by inflation or hyperinflation, whatever you want to call it. They will make the payments for all of the things that we are obligated to do, but confidence is still going to be lost, right? Confidence will be lost not in the U.S. government's ability to pay its debt, but confidence will eventually be lost in the purchasing power of the U.S. dollar. It's really one or the other at this point because I just don't see there being any political will to balance the budget and pay things off. I mean, eventually, what we're probably going to see is some massive crisis, a breakdown, say, of the banking system, a breakdown of commercial real estate. I don't know what the next, financial bomb to explode is going to be in the economy, but it's going to be something. And when that happens, there's going to be massive QE, massive rate cuts, and very likely what we'll end up seeing is, I expect the form that we'll see this play out in is the Treasury creating some kind of a long-term, low interest rate bond that they sell to the Federal Reserve. The Federal Reserve will take those things onto their balance sheet. They will keep them there indefinitely. And essentially, that will just be debt monetization. And that's what QE has been all along, folks. I mean, Ben Bernanke, he told us, well, when financial conditions normalize, we'll draw down the balance sheet. Well, they tried doing that with quantitative tightening. I mean, mind you, they blew the balance sheet up to about $8 trillion. It was nowhere near that high when Bernanke was around. But the QE just got out of control, and, $8 trillion, $9 trillion of debt monetization, essentially, by the Fed blowing up their balance sheet, buying all this U.S. government debt. They tried to shrink it with QT, and what happened? Well, in March, we got the second and the third largest bank failures in U.S. history. More recently, we've had more bank failures. So things are falling apart, and they got down to something like $8.3 trillion. And then through the Bank Term Funding Program, the BTFP, that was the Fed's response to the collapse of SVB and Signature Bank, they began expanding the balance sheet again. Now that, once again, has begun to draw down slightly, but I'm sticking to my forecast that we're going to see $10 trillion on the Fed's balance sheet before we ever see 8. And, even though they seem to be returning to QT, the Fed's balance sheet ultimately is going to get much bigger. At least that's my call. That's what I am calling here in 2023. It might take a while before that happens, might not happen this year, but eventually I do think that the Fed is going to be back to easing, back to bailouts. We know their game plan. When the banks started to fail, they immediately took action to intervene. So, I mean, the opposite of stimulus and QE is just letting things fail. That's the free market solution. Like when banks make a bunch of bad loans or they buy a bunch of assets like U.S. treasuries that have a low yield, and then they have to sell them and they have a potential for going belly up. You got to let them go belly up. You got to let those banks that make bad decisions fail. And that way, banks that are sounder in their balance sheets, and that make better decisions can come into the market. But with all these FDIC guarantees and everything, it's a huge moral hazard. These banks, consumers who normally would regulate the banks on their own because of, supply and demand, you wouldn't want to keep your money in a risky bank. You would take it and you'd put it into institutions that were making better decisions. But now, I mean, with the FDIC guaranteeing all the deposits, I mean, who cares? You put your money in any bank, it doesn't matter, right? It doesn't matter what kind of risks that bank is taking, because if something goes wrong, you just get bailed out. And this is the whole problem with bailouts and stimulus in the first place. It creates a huge moral hazard. People, their incentive systems, because human action in the economy is all driven by incentives, right? I wish I could remember what book I read this in, but I remember I was reading something about, I don't know, what are they called? Optometricians or whatever, eye doctors, guys who do like LASIK surgery and stuff, that there was a procedure that Medicare was paying out like $1,000 for. I think it was cataract surgery. And then Medicare radically adjusted the payments that they would issue for that, dropped down to like $100. And then the following year, the number of cataract surgeries dropped dramatically. So, you've got to understand incentives. And if anybody knows what book that's from, it's a very popular book. I just can't recall off the top of my head. But, it's all about incentives. And so when you guarantee that businesses can't fail, that individuals can't fail, that banks can't fail, you're creating this huge incentive to take risks that are unnecessary. And we've been doing this for so long now. We've been preventing the free market from doing its job. Well, not we, not we stackers. I don't have much say in this, but I don't elect any of these clowns. I voted for Ron Paul. I think he was the last presidential candidate I voted for. But anyway, I'm not trying to get political or anything. I'm just pointing out that if someone's dedicated to running up massive debts and deficits, I don't support them. But we've been doing this for so long that now when things finally are forced to correct one way or the other, it's going to be terrible. I mean, Janet Yellen's warnings are accurate. everything is levered up, everything is extremely fragile, and so any rocking of the boat, which includes, failing to raise the debt ceiling, could have drastic consequences. But my rebuttal to that is that those consequences are on their way anyway. It's just like Ayn Rand said. She said you can ignore reality, but you can't ignore the consequences of ignoring reality. And I think that that really sums up where we find ourselves at, because for the past 2 decades or so, even more really, we have been ignoring reality, but now the consequences of ignoring reality are beginning to rear their head, and they're just going to be things that can't be ignored. Although I am sure that the powers that be, the Fed and the Secretary of the Treasury and the current administration and future administrations, are going to do their best to ignore these and to reframe these. I wouldn't be surprised if we get a hyperinflation and we get a huge run up in the price of precious metals. I wouldn't be surprised if stackers get demonized. If they say, "Oh, these greedy stackers hoarding all their precious metals," they might try to confiscate them and stuff. I mean, I have no idea how that'll play out. But the logistics of such a thing favor the stackers. That's all I'm saying. It's a lot easier to confiscate your bank deposits or to just confiscate your wealth via inflation than it is to confiscate physical metal that's in your custody or in some kind of a secure, maybe offshore depository. Whatever you decide to do to store your metals, the counterparty risk there is a lot less than bank accounts. People say, "Oh, they could confiscate the metals." Yeah, they could. I mean, they could also just confiscate your bank accounts, or just print the money into oblivion. So everything is risks and rewards in life, right? You got to balance those out. But to me, being in physical precious metals, assets that have been stores of value for literally thousands of years. I mean, there's almost no other asset you can say that about. I don't think that's going to change anytime soon. So, that being said, what else are we going to cover today? We've got the president coming back. They're going to reach a deal on the debt ceiling. I think that was pretty much everything I wanted to cover today. What was going on in markets, why gold and silver are falling. Largely, it is a technical pullback, in my opinion. If we do see the debt ceiling get raised, it's possible that we could see it drop further. I mean, any number of things could happen that could cause the price of metals to drop further. We could see a deflationary crisis rear its head. We've been having a lot of these, increased jobless claims and stuff like that. But the closer we get to a deflationary crisis or a economic implosion, the closer that brings us to the response to that crisis. And the response to the crisis is what you really have to pay attention to. It's not the crisis itself. It is the government response, the Fed response. It's the, problem reaction solution dynamic. I think that's the Hegelian dialectic is what that is referred to. But that is what the powers that be use. I mean, that is for time immemorial what people in power have used. They create a problem. So, you get the economy all levered up. You create all this incentive for this malinvestment. You create this moral hazard by ensuring all of these bad bank deposits. And every time a bank, goes belly up or a financial institution goes belly up, you socialize the losses. Meanwhile, the fat cats, the plutocrats, all the profits, are privatized. I'm not getting a golden parachute. You're not getting a golden parachute. But what you do is you create this environment where the economy is extremely fragile, and then when it collapses, you come in with a solution, and basically you just do more of the same. But it's like they say, never let a good crisis go to waste. So when we do eventually get the next crisis, whether that be a U.S. debt default or whether it be an inflationary default that's brought on by all of the profligate spending and all the can kicking, constantly raising the debt ceiling and just borrowing trillions and trillions of dollars, it might come as a surprise to some folks, but you can't do that indefinitely. You can't just keep borrowing money. I mean, it would seem logical and it would seem easy to understand, but politicians don't seem to grasp this, and the electorate doesn't seem to grasp this. And that's intentional. That's the educational system where basic economic laws, basic economic realities are not taught. And in fact, I mean, I took an economics class in high school, and I can remember it basically in retrospect being like a just propaganda course for how great central banking is and how great the Federal Reserve is. If I recall, I mean, that was some time ago now, but It's all Keynesian nonsense. The reality is that we are on a very unsustainable path, and this stuff right here, this silver, I've got some of these weird colorized silver eagles in this stack here, you can see. This stuff is going to really pay off to have in your hand. I mean, I did that video yesterday where I talked about $200 silver. Problem is that if you get $200 silver, it probably means that, everything else is so compromised and so bad that the price of silver is like the least of your worries. I mean, you'll be glad to have it. Again, I've talked about in the past, I've got some, close family members, some in-laws who survived the hyperinflation in Venezuela, and they were very glad to have precious metals. I mean, precious metals were a good store of value for them. They survived the hyperinflation, not in comfort or anything. They still struggled, but the metals really were a huge asset for them to be able to just get groceries and be able to pay basic expenses, selling them off a little bit at a time for US dollars because they hadn't lost their value the way their bolivars had. But colorized coins are junk. You'll get coal price for them. Yeah, that's why I bought them, actually, because they were really cheap. I didn't colorize them myself. I mean, these are cool, whatever. They're military-themed defenders of freedom. It's a little cheesy to put that on an American eagle, I guess. Nothing against the military or whatever, but I do think it's a little bit cheesy to do that to your coins. But the coin shop had these, and I think I paid spot for these. They're silver eagles, folks. They're still worth more than spot. I bet you can go and sell this for more than spot right now. And I bought these many years ago, so spot was lower back then as well. But yeah, you're not wrong. They're not the most beautiful coins. Look at this. I mean, this is a little bit gaudy. Not gonna lie, a little bit silly. But hey, colorized coins, I don't care. Still silver, right? And again, this is a silver eagle, so you're still, in today's crazy environment where the mint isn't putting enough of these out, I bet you still get like probably 30, 35 bucks or something like this. Maybe I'm wrong about that. I don't know. I don't, sell silver. I typically buy it. I'm accumulating hard assets. I'm not selling them, but I think I'd get more than spot for this. Let me know in the chat what you think a colorized eagle is going for. I'd be curious to know, or if you have any of those. Anyway, I have a tendency to do this on these live streams. I kind of get going on something. I say, well, that's it, but then I'll just keep going for a little bit. So anyway, appreciate all of you bearing with me, everybody who watches these videos. And sometimes, I see the view count ticking up. We got 192 people in here right now, which, I find just amazing, but I'm extremely grateful for all of you. And I think, well, I could keep going. I got a little bit more to say about silver. I could probably go on for hours. I'm not going to do that to you today, though. I definitely hope to trade some silver for gold also. Sideline Silver Stacker says, well, yeah, in that $200, this was another thing I did want to comment on, was I put out that video yesterday where I talked about $200 silver, and someone put in the comments, if silver spikes up to $200, it won't stay there for long. In 1980 and 2011, it spiked up and it dropped right back down. And yeah, that is true. Not guaranteed that, that will be how it plays out in the future. History, it rhymes, but it doesn't always repeat. But yeah, it's possible. If you see the gold to silver ratio go down to like 30, or if you see it go down to 16 like it did in 1980, I guarantee you I will be swapping quite a bit of this for gold at the very least. I mean, I might sell for some fiat too if I think I can roll that fiat into some other assets that maybe are more undervalued at that time than silver, because, if we see silver spike up to $200, I don't think you can any longer say that it'll be the most undervalued asset around. But right now it still is. It's extremely cheap. It's nowhere near that price. And yeah, so if silver spikes up, absolutely, you probably want to unload some. I mean, that makes sense. Just like when it dips like it is now, you want to buy some. That's the way to do it. When the price goes up, you sell. When the price goes down, you buy. That's how I view it anyway. You got to buy when there's blood in the streets. But I don't know exactly what price I would begin selling or swapping into gold at. It would depend entirely, I think, on that gold to silver ratio. But if it drops to 30, that's when you kind of want to start thinking about it. Maybe even around 40, like, hey, maybe I should get a little gold and just trade out some of the silver, because, both metals are great. It's just that when the gold to silver ratio is at 83, like it is today, silver's way cheaper. So that's what I'm stacking now. And again, if any of you are looking for a deal on some silver, SD Bullion has this flash sale on these 1 kilo bars. I just picked this up, so we'll be opening that up next week when it gets here. I think their shipping times are back to normal. Hey, also, guys, silverbotanicals.com. This is another sponsor. While I've got you here, make sure you check them out. They are awesome. Dean DeWolf, he's a chemist specializing in silver. They are a channel sponsor, one of the oldest ones. They have got amazing household products using silver. They use silver. They use silver's antimicrobial and I think biocompatibility is the word. That it's good stuff. You can ingest silver. You can use it topically. They've got a deodorant that uses silver. Pretty amazing stuff. Doesn't have any aluminum or anything like that, which I don't think is the best thing to use. Although aluminum is a good antiperspirant, but not the healthiest thing. So anyway, check them out. And you can use coupon code STACKER to save 10% off your order at Silver Botanicals. Make sure you check that out. Gary says, I thought you had to buy when it goes up and sell when it drops, but I'm not serious. So he's kidding. Yeah, well, Gary, it's kind of funny you say that because that is how a lot of people operate. If you ask them to think about it logically, obviously that's not going to be their answer. They're going to say, no, buy low, sell high, but very few people actually do that in practice. I mean, it's an interesting thing. When you see the price spike up, you see a lot of people buying, and the premiums sometimes soar then too. And then when the price drops, a lot of times people get discouraged and they think, oh, and maybe they sell at a loss. I mean, it's very strange, the human psychology. Paperweight says, what's your ideal between rounds and sovereign, the ideal ratio between rounds and sovereigns? I do not have an ideal ratio for that. I just buy what I think is a good deal. At the end of the day, an ounce of silver is an ounce of silver. This is a Silver Eagle, albeit a colorized one. This is a generic silver round. To me, I'll buy this if it's cheaper. I'll buy this if it's the same price or maybe just slightly more expensive than a round. It just depends on the market conditions at any given time. Or if I find a particularly cool round, I don't have it in front of me here, but I've got my Aztec calendar rounds. I really love those. Those things are cool. The Golden State Mint makes those. The Golden State Mint actually, I think, is going to be coming out with a gold Aztec round, although it appears to be sold out for the time being. But that would be very exciting if they can come out with those. That would be cool. And when they do, SD Bullion will probably have them. That's where I usually get my Aztec calendar rounds. But again, it doesn't really matter. Sovereign coins are preferable, I guess, if you can get them. But I'm not paying $40 for a Silver Eagle just because it's made by the U.S. Mint. That's for sure. Right now, I'm not sure what the best sovereign coins are. I know SD Bullion had a sale on some Krugerrands last week, and it seems like the Britannias are also a good deal right now. It seems like rounds have kind of this very similar premium to the sovereign, so right now I'm favoring the sovereign coins, but it just depends. An ounce of silver is an ounce of silver. There's a few advantages to having sovereign coins, but generic rounds are awesome too. I mean, I love generic rounds. So many cool little patterns. You got these, like silver trade units. I think I have one of those out here. I really like those. I don't know what about it. Okay, I don't have any silver trade units out here in front of me right now. But anyway, I just like, especially vintage ones like this Sunshine Mint round from 1984. I mean, that's cool. That's very old. That's almost, 40 years old now. Pretty neat. But I just like, silver in general. Surprise. I think you guys know that. And gals. Anyway, that's it. I actually have to go, folks. Thank you so much for tuning in. It's always fun. I appreciate everybody who tuned in, left something in the chat. Please do smash that like button. Don't forget to subscribe. Check out SD Bullion's sale on Kilo Bars, and make sure you stay safe and happy stacking, everybody. Thanks for tuning in. Smart Silver Stacker out.